Hello, I'm Michael with Penner Investments, and thanks for tuning in today. Today I want to spend a little time explaining what an S&P 500 index fund is and why it should be the cornerstone of the average investor's portfolio. The S&P, known as the Standard & Poor's 500, includes stocks of the 500 largest U.S. companies based upon market cap. While there are a few other criteria to make the cut, the market cap is the predominant factor. The market cap refers to the total value of the company based upon outstanding shares of stock. The S&P 500 is also one of the best gauges of how the U.S. Stock market is doing overall. The best thing about the S&P 500 is that you can purchase shares in a low-cost index fund, and again, from my last episode on the path to becoming a millionaire, the historic returns of the S&P is right at the 10.5% mark. While this is no guarantee of future returns, history does have a way of tending to repeat itself. As Warren Buffett recommends, the average investor should be investing in the S&P 500 instead of selecting individual stocks. The reasoning is that if you select a few performing individual companies, your portfolio will suffer a major loss. With the S&P 500 index fund, your investment is in 500 different companies, and you can afford a few poor performing stocks, as there'll be some above average performing stocks that will offset this. Most 401k providers have the S&P 500 index fund option available, and you do not have the option to select individual stocks anyways. One of the most important concepts to remember when investing in the stock market is to leave your emotions out of investing. When you invest in this index fund, leave the money there and do not touch it. This money is earmarked for retirement, and unless you have a different investing goal, you just want to leave it alone. Many people panic when the economy is not doing very well, kind of like it is here in the recent past. And while the economy is in a recession, people want to tend to panic and pull the money out. And the history of the stock market has always rebounded and went higher. So trying to time the market, you'll miss the rebound, and this typically happens very fast in most instances, and you'd not be able to get back in time to participate in the rebound. If you're finding this information helpful, please hit the like button and subscribe so you do not miss out on future content. Another concept I want to explain is dollar cost averaging. This is the best way to invest in the stock market, and is the way that most company 401ks invest your contributions. Dollar cost average is investing a set amount of money at a set interval. This can be investing $25 a week, $100 a month, or $300 every quarter instead of taking a lump sum of money and just making the purchase annually. By dollar cost averaging, you are buying the shares at the market low, some at the midpoint, and some at the high. The average person goes about thinking about investing in the wrong manner. They get upset when they see the market go down, or if they've made an investment. I mean, I think everybody's a little bit guilty of that. I've gotten a little upset when I see a stock that I've purchased go down the next day. But the right way to look at this is to see it as an opportunity to invest more while the stock market is on sale. You wouldn't get mad about buying a second item at your favorite store if you could get it cheaper the next day if it was on sale. So you want to think about investing along those same lines. I believe that more people would see this angle of investing if the news didn't project the market in such a negative way when it goes down. If the news would say the stock market is offering investors stocks at a discount today, and many are waiting to see if the sale will continue tomorrow, the prices just keep giving investors a better opportunity to buy, I think people would have a little bit different outlook on it. Well, I hope everyone has enjoyed this episode, and next week I'm going to be talking about how I select individual stocks. And before you go on to selecting individual stocks, make sure you have this S&P 500 index fund as a cornerstone of your investments. Thank you and have a great day.